Yesterday I was looking at the Euro USD and something just didn't add up. Every lower time frame is screaming by. I mean, the 4 hours and the 1 hour both trending up and expanding at the same time. But when I looked at the weekly, monthly, daily, they are having a point at a sell situation. And when I decided to check the fundamentals, well, I am not getting a bullish back in there either. So which do I trust? Over here on the 4 hours, you don't need anyone to tell you that this market is bullish. I mean, market is clearly running to the upside, as you can see in recent time frames. But what the market structure actually looks like, well, you can simply draw from any point in time from the past. We have a high here that was not mitigated up until most recently this yesterday. Then we have a low down here that got taken out, and this high becomes valuable by the standards of market structure. But if you look down here, we have a low that never got mitigated, and then price finally rallied to the upside until it took out the whole structure. Even if you want to draw the internal structure, which will be the 1 hour structure anyway, let's look at it. So the 1 hour, you notice the same exact thing. This market has just been running up. We have highs being taken here, clear highs and clear break of structures to the upside. Each time the market moves, it breaks structure even more and continues its rally to the upside. So clearly you can say this market is in an uptrend. However, this is where I got caught off guard. I decided to go up to the higher time frame, something like the daily, to look at what is really happening in this market. And when you open that chart, boom, you're shocked. What is the shock here? Well, you may think it's an uptrend. However, take a very good look at the situation again. We always start from the very left for structure. Yes, we have a lower point than where price currently is, but at the same time, we have a higher point than when price has ever gotten to. And guess what? Before this higher point, this was the lowest point ever, and price did what? Break below that, and even continued to break below that. So currently, this market is looking like it's running up, but it's looking more like it's running up towards this other block right here. And that looks like the only thing on the daily. But if the daily was just it, I think that would have been fair. However, when we look out for other situations, things like when you look at the weekly time frame to just confirm your entire bias, well, the weekly time frame is somewhat in support of a buying momentum. However, the weekly time frame is showing you the expectation of a pullback. I mean, take a very good look at the situation. This market looks like it's rallying for one single reason. It's rallying to finally make that move. You see that run up? See that run up, that pullback, a run up again, and a sweep of liquidity, and then we finally start seeing the pullbacks. Well, I'm not saying this market is about to fall. I'm simply saying that the data of the weekly time frame, the daily time frame, combined with the 4 hours and the 1 hour is saying one thing. Market is rallying into a zone where there might be selling. But as if it was not enough, I decided to take a good look at anything outside the chart, because the chart itself can show you things but not be all too accurate. So we decided to really back it up by looking at the fundamentals. Right here is the fundamental for the euro against the US dollar. And what do we see? Well, the system is kind of not so clean. We have a read score of -2. That is already saying we're leaning bearish. The economic data itself is saying that we're going down. And where is the economic data really coming from? I mean, take a good look at the employment bias. It is just -0.01%. It is really small. The economic growth shows that the euro has a slightly, and that slightly is stressed, slightly better situation. However, inflation is where the whole story turns apart. The US dollar has a better inflation metrics than the euro currently. And then we have other data that isn't making any move. So why am I feeling mixed up at the same time? I am seeing a bearish fundamental, a bearish higher time frame, but a strong bullish lower time frame. Well, take a very good look at the central bank difference. The difference is more in favor of the dollar than the euro. And guess what? Even the big traders, the COT reports, the leverage funds are deciding to sit back on this market. They are not crazily buying or selling this market. They are not leaning in any direction. They are just flatlined around this whole situation. Just like we saw on the charts, the daily region is seriously running up, the 4 hours is running up, they both have expanding volatility. But the funny thing is, the strength, the daily strength is not diverging. The 4-hour strength is diverging to the positive side, obviously. You could see it while you saw the chart, but the daily strength is not diverging. Yesterday, we got a shocker from the US dollar, major bond market movement, and that led to an extreme short the dollar momentum. But does that short the dollar momentum really hold up? Or are they going to suddenly come back and buy back the dollar at heavy speed? We don't know. Geopolitics could play any game anytime. Maybe Donald Trump could finally let the Strait of Hormuz finally come free, and all of a sudden there will be rush buying of the dollar again. We can't tell. However, the weakness is there that the Euro USD is looking weak from the fundamental, but looking strong on the lower time frame technical market. What's my verdict? My personal opinion is simple. I see a market that is rallying into a zone where I have to be very careful of buying in the first place. Maybe I will not sell this market, but at least I would not try to join the extreme rally. I'm kind of a trader who likes to make the market or wait for the markets to pull back into good zones. Something like the 1.15 zones, 1.154 zones, or even a bit lower for better risk to reward ratio. This is my personal verdict. This is how I see this market. But personally, I do not want to come into this market at this extreme knife edge. Unless the COT data and any other data starts to suddenly flip bullish, even at that, it is not still going to be a dive in and buy. It's going to be a wait for it to retrace situation. But if the data still remains bearish when we find ourselves way up here, the US dollar is definitely going to hit supply somewhat. And if the US dollar does hit supply, especially if the Strait of Hormuz or some bond situation happens, we're seriously going to see the same speed we used in running up. We're going to see something similar in the rundown. But until then, I remain Nicholas, and I tell you, do what to hit the subscribe button, drop the currency you want me to view next, and I'll see you all in the next one. Peace.